Hello and welcome. You're tuned into Your Trades with me, Ankita Saxena, and with me is Snehi Shah. Well, Snehi, a rather somber day for the markets. Nothing great happening on the markets. In fact, the volatility is back in the market. It was a quiet start to this week. It was a truncated week, a quiet start. We were whipsawing between, the red and the green. But the important thing to note today was India VIX that topped 22 mark for the first time in 19 months. Now, largely an okayish day in coming in with metals that were in focus and shining away in trade. The metal index surpassed, the 10K mark. Hindustan Zinc was the top gainer, trading with gains of 18%. Jindal Steel, Hindalco, JSW Steel, all trading high with gains of over 4%. On the losing side, bucking the trend was the FMCG and the realty pack. But for stock-specific actions, Snehi, tell us what were the stocks that were buzzing and not buzzing in the trade?
Well, absolutely. So, it's fair to say that we had an equal share of both buzzers and non-buzzers in today's trading session. But the good part is, while, like Ankita mentioned, we've managed to close above 22,500, managed to close in the green when it comes to Nifty. We were very close to 22,600 one point in the day, but we've slipped back from those levels. Now, in terms of all the stocks that were big buzzers in today's trading session, you have the names like Hindustan Zinc. Metal was your biggest winner today, and that was heavily led by Hind Zinc, which was up almost 20% in today's trading session. You have RVNL, Cochin Shipyard, Hoodco, SJVN, Balkrishna Industries. All of these stocks were up and away in today's trading session, anywhere between 9 and 20% upper circuit. So good moves coming in from these list of stocks. But moving on to the biggest losers, then you had the likes of Delivery, Triveni Turbine, Nuvama, Aptus, Trident, Policy Bazaar, Godfrey Phillips, Timken India, Astral, a whole host of stocks that were slipping away in today's trading session as well. So let's understand now what these stocks were up to today. You had Astral down 5% on the back of poor set of numbers. Management has said that things will improve after the Hyderabad plant is out of the way. Delivery was down 10%. CLSA has also gone ahead, downgraded the stock and cut the target price as well to 488 rupees. Then you had the likes of Honda India Power Products down 10.5%, poor set of numbers, EBITDA margin in pressure. Dodla Dairy was down 5%. Revenue has increased by only 8.5% year on year. On the flip side, you had IRFC that was up 4%, a good set of numbers coming in. PAT has expanded smartly by 33%. RVNL, that stock has hit a new life high today. That was up 13% on the back of the order win that it got from Southern Railway. And Kalpataru Projects also was up 5.5% today. They signed 3 contracts worth 7,550 crores with Aramco. So all of these stocks were big buzzers in today's trading session. Other than that, all-time high has been reached for RVNL, Cochin Shipyard, Holdco, Aurobindo Pharma that kept breaking its all-time high level and kept soaring in today's trading session. So that stock also did pretty smartly in today's trading session as well. So that's the lowdown on what the trading session looked like for today. But when it comes to tomorrow, all eyes are going to be on Paytm, Nykaa, and from the Nifty pack, you have Sun Pharma, Power Grid, as well as Grasim. That will be out with its quarter 4 numbers tomorrow. So all eyes will be on those results as well, Ankita, tomorrow.
Right, Snehi, but we'll move on to our technical analyst who's joining us right now. Kunal, hi, welcome to Closing Trades. Kunal, tell us, the volatility is back in the market, though we did see the recovery continue on Nifty. We managed to close above the 22,500 levels. We also saw India VIX, topping the 22 mark. So going ahead, what is the trend going to be? What are you penciling in on the benchmark indices?
So I'm bullish on the indices and continue to maintain that stance. I think the adjustment towards the India VIX, I think so far, and especially in that 10 or 12 consecutive days, where the India VIX had moved higher from sub 10 to 20 plus mark. I think that adjustment or major part of that adjustment is now behind. I think what we could be looking at is that the base, which was earlier at 21,700 mark, moving up hard towards 22,200 levels. We've managed to stay above that 22,500 mark for the second consecutive day for the index. So I believe that maybe another 150 point push on the upside. And if we create a buffer of say 0.5% to 1%, then we could be looking at a fresh support for the index at 22,500 mark. So bullish on the indices. The sector churn is quite vibrant. The mid-cap end of the market, the PSU stocks, metals, etc., indicate that the momentum is definitely into these pockets. So I think one could probably concentrate over there, but the bias still remains bullish on the broader market as such.
All right, Kunal, so bullish view coming in from the broader market. So tell us, what stocks are you picking out, and what's your broader market picks? How would you pick stocks to navigate the kind of volatility that we've been seeing in our markets, especially with the VIX spiking once again today?
I'll go with two fresh candidates of breakouts. The first one is Barn Metropolis. So I think that's a stock which is looking very charged up and interesting. The stock is coming back into a breakout mode. Compare this with the previous major highs in 2020-21. The stock is almost 30-40% still lower from those levels. But I believe at current levels of 1900, the breakout is quite strong. So would look out for a target of at least 10% on the upside for Metropolis. Targets of 2100, stop loss at 1800 mark. And the second would be a Barn Tech Mahindra. Again, I think many of the large cap IT stocks, especially Tech Mahindra specifically, I think is showing signs of a very interesting pattern. It's a triangular pattern, a flag pattern breakout for the stock. So expecting a strong 5 to 7% up move over the near term. 1380 as a target, stop loss at 1290.
All right, Kunal, thank you so much for joining us. But with that, let's go across to Shrishti, who's standing by with the technical chart. Shrishti, tell us, what are your breakout stocks for today?
Well, two counters on the breakout side. Firstly, let's have a look at ABFRL because that stock was on the roll today, more than 7% jump in today's trading session. And what was interesting to see that the stock managed to break its key resistance of 270 odd levels, where the stock was facing a resistance around that range. But in today's trading session, a strong green candle is what the stock made and definitely broke above those levels, a bounce exactly from its 20-day moving average on the charts you can see happening for ABFRL. So this stock was one of the breakout candidates that we wish to highlight today. We're moving on to the next counter then, and this one is Aurobindo Pharma because the stock just ahead of the earnings was seen to be holding strong, hitting its all-time high levels, and this stock actually has been an outperformer in the pharma space. But what we have seen interesting about Aurobindo Pharma is that the stock managed to break above its resistance of around 1200 odd rupees. The stock, the move was also supported by a long build-up and has been continuously taking a support of its 20-day moving average, which is again upward sloping. So these are the factors that we spotted on Aurobindo Pharma for yet again a breakout candidate. Back to you guys.
Alright, Shrishti, thanks so much for spotting those two breakout stocks for us. But with that, it's time to slip into the word from the wise segment. And today it happens to be Mihir Vora of CIO at Trust Mutual Fund. Now, remember when we did see a slew of FMCG earnings coming in over the last month, the key word or the key factor to watch out for was rural recovery. And speaking about the rural segment in India, Mihir Vora, CIO at Trust Mutual Fund, he says that they are eyeing themes in the space with a longer run rate. Listen into what he had to say.
Even within the rural space, there are segments which probably have a longer runway. For example, tractors. The penetration and the use of tractors and other equipment is going to grow.
Yeah.
So while FMCG, which is a low ticket item, and toothpaste, etc., which are high penetrated categories, may not grow that fast. But within the rural space also, there will be a shift in consumption, the shift in demand. So we would like to go into those spaces where the visibility and the runway is longer. So there are segments within the rural space also which we can pick and choose.
Well, with that, it's time for us to slip into a short break. You don't go anywhere. We'll be right with more action coming on the other side.
Hi there, welcome back. You're still watching Your Trades on ET. Now let's take a look at the derivative snapshot of today, and let's take a look at the index futures trend for the 23rd May expiry, which is this Thursday, which is in 2 days. On the Nifty front, we were seeing some long build-up coming in, and on the Bank Nifty, we did see some long unwinding coming in. So that's some key activity to watch out for. Now, in terms of India wicks, we did cross 22 at one point in the day, but we've cooled off slightly nominally, and we've ended the day at 21.8 when it comes to India wicks. Now, in terms of active calls for the 23rd May expiry, we did see some call writing happening at 22,600 and 22,700, making 22,600 the next key resistance level to watch out for. In terms of active put writing, we did see some active puts being written at 22,500 and at 22,400, making 22,400 the next crucial support level to watch out for. So 22,600 on the upside and 22,400 on the support is the Nifty levels that you should be keeping a close eye on.
All right, definitely, Snehi, we will be keeping an eye out on all these levels that you mentioned. But we all were, blinded by the sheen of the metal pack today. The metal pack was on a tear on the back of several tailwinds. In fact, Hindustan Zinc, Vedanta, took the index above 10,000 mark for the first time ever. My colleague Ashish is joining in to explain what's driving this rally in the metal pack.
Well, absolutely. Metal stocks are shining bright today. Nifty Metal Index is the biggest sectoral gainer today, trading at all-time high levels. It crossed that 10,000 mark for the first time ever. And remember, it is not just today. Nifty Metals have been outperforming broader markets for the last many months. So now if we look on a year-to-date basis, Nifty Metal Index is up 25% at a time when Nifty 50 has just given returns of nearly 4 to 5%. In the last 1 month alone, Nifty Metal Index is up 12%. At a time when Nifty 50 has barely managed to give any returns. This is in the last 1 month. Some of the top gainers on the Nifty Metal Index in the last 1 month include the likes of Hindustan Zinc. The stock is up 12% today. It is up nearly 75 to 80% in the last 1 month. We have Vedanta and NMDC amongst other top gainers on the Nifty Metal Index, which are up nearly 20 to 30% in the last 1 month alone. One of the main reasons, of course, is the surge in commodity prices that we have seen globally. So zinc prices, for instance, are up nearly 4% in the last 5 days alone. We have copper prices which are at record high levels. Copper prices have risen 7% in the last 5 days and are up 21% on a year-to-date basis. Nickel prices too are trading at 9-month high levels with a surge of nearly 12% that we have seen in the last 5 days alone. Now the reason for surge in commodity prices is rising demand, improving economic macro factors from several global economies, the likes of US and China. We also have US and UK that have imposed restrictions on Russian metal, which could create some supply concerns, because of which commodity prices globally are rising. So yes, of course, we have several factors which is leading to the rise in global prices, commodity prices, and that is the reason metal stocks back home in India are on a tear today.
All right, Atesha, thanks so much for explaining that to us in such great detail. And the metal pack top winner for the day, up almost 4% intraday, is when Nifty Metal Index has closed. But let's talk about some other buzzers in today's trading session on the back of multiple earnings coming out. And you had the likes of HAL, which was a buzz earlier but has closed with gains of 1%. You had RVNL up 14%. So good moves coming over there, a life high for that stock as well. And City Union Bank on the flip side, poor set of numbers coming in, 5.2% lower is where that stock was. Now we caught up with the management of all of these companies, listened into the outlook and the path ahead and what they had to say when it comes to their Q4 earnings.
Our intention is that to see that this 13% has become the benchmark. Now we should at least at the minimum we should sustain this 13%, and we are hopeful that with more and more execution of orders coming through in the next few years, the growth rate is likely to pick the momentum, and we are confident that we should be able to reach around 15% in the next 2 to 3 year time frame. What is more important is that this growth rate is going to be sustainable for the next few years, given the current order book position and visibility of orders in the pipeline for the future.
We expect in next financial year, that is 24-25, we should have an order book of around 1 lakh crores, the top line 23,000 crores, bottom line 1600 to 1700 crores. So this is for 24-25. And with the same kind of projection, we can predict for 25-26. We are eyeing for business in the neighboring countries like Bangladesh, Nepal, Sri Lanka, Mauritius. There are large number of projects in African countries. We have been shortlisted in expression of interest in Africa. And 2 projects we have been shortlisted.
Whatever we had in the Q4 is a very good indication on how things will improve in the current year. Once we cross a double-digit figure during the course of the year, we will be in a position to give the exact expectations and the forecast for the current financial year. And finally, when things come to ROA, you can clearly see things have crossed 1.5%, which is our long-term average. So the things are back on track.
And well, those were some of the earning buzzers. But for more buzzers in the trading session, we're joined by my colleague Gaurav with a list of stocks that was in news.
Well, yes. Let's begin with Arvind Fashion, because if you look at the numbers, revenue increased almost by 3.7%, net profit increased almost by 25%, and we saw EBITDA improving almost by 160 basis points on a YY basis. And on the back of this, we saw this stock was in green today. Next, let's talk about RateGain Travel, because here also we saw increase in revenue of around 39% on a YY basis. Net profit improved almost by 48%, and lastly, EBITDA margins also improved almost by 350 basis points. The next one we have is Welspun Enterprise. If you look at the numbers, revenue revenue was down almost by 2% on a YY basis. Net profit declined almost by 45%. And on back of this news, we saw this stock was trading in red today. Next, let's talk about Aether Industries, because if you look at the numbers, the company actually reported decline of 24% in terms of revenue on a sequential basis. Company reported net losses of 1.4 crore rupees because there was an exceptional item of 7.3 crore rupees in this quarter. And on back of this news, we saw this stock was also trading in red today. And lastly, let's talk about Man Industries, because as per company's filings, company has now received an export order worth 505 crore rupees. And with this order, the order book now stands at around 2,100 crore rupees, which is executable in the next 6 to 8 months. And on back of this news, we will also watch out for Man Industries. So on back of numbers as well as on back of the news flow, these are the stocks which we are keeping an eye out for the trade tomorrow.
All right, Gaurav, well, thanks so much for that quick list of all the stocks that were in news today. But let's keep it going with earnings then on that note. And tomorrow we're expecting numbers from the Nifty 50 company Sun Pharma. So let's go across to my colleague Shrishti, who's standing by with a list of what all the factors that we need to watch out for and what the street is penciling in when it comes to this pharma major. Shrishti.
So we're expecting a decent trend from Sun Pharma, because though on a sequential basis we are not expecting a significant jump, but on a YY basis there could be a double-digit growth for Sun Pharma, and all eyes will be on the US sales this time around, because for US we're expecting a growth of 16% on a YY basis, and we are expecting the number close to be $500 million, and the push could once again come from the specialty sales portfolio, and the key to watch will be the contribution from the G-Rev limit as well. But apart from that, in the domestic business, we are expecting a growth of 10% on a YY basis, and actually factoring in all of these into the numbers, we are expecting a revenue close to 12,522 crores. The EBITDA is expected at 3,240 crores, while the margins expected at 25.9%. And lastly, onto the profit figure, though on a sequential basis there could be just a flatter sort of a growth, but on a YY basis a 31% jump onto the profit of the company is what we are expecting at 2,602 crores. But apart from the numbers, the key to watch will be the management commentary and the update on remediation of the Halol and the Maholi sites. Other than that, the outlook on their R&D spending as well. So, and how are they seeing the outlook for the specialty sales, not just in US, but in the rest of the markets as well. So all of this we will be eyeing on the management commentary, but this time a decent set expected from Sun Pharma. The US sales as well as the margins are key to watch.
Well, yes, besides Sun Pharma, there's another counter that's going to report its Q4 numbers, and that is Nykaa. And for that, my colleague Vinny is standing by to explain what the street is estimating for this company.
Yes, so in terms of numbers that we are expecting from Nykaa in Q4, we're comparing on a year-on-year basis. Consolidated numbers, a growth of around 26% in terms of the top line, while the profits expected to see a 5.7 times growth on a year-on-year basis. 11.4 crores is what we're expecting the profits of the company at. Margins expected to be flattish at around 5.5% when compared to the same quarter last year. Overall, sequentially, you may see a bit of a decline because Q3 normally is a seasonally high quarter. So yes, sequentially maybe a decline that one could see. But other than that, year-on-year basis, we're expecting a growth. Fashion segment, they're expected to see a market share gain, as well as overall in terms of the BPC segment, that's also expected to do well, and despite the challenges that one is seeing in the demand environment. Strong GMV growth is what the company highlighted in the Q4 update, around in early 30s on a consolidated level, while revenue growth also is expected to be in high 20s. So yes, that's what we're expecting, 20%, 26% growth there. Keep an eye out on Nykaa in terms of the factors, in terms of commentary that one should watch out for in terms of industry trends from BPC as well as the fashion segment in FY25, as well as expectations in terms of when is the break even going to happen for the fashion segment, and international expansion plans, what are that? That's the commentary we're watching out for.
All right, Vinny, thanks so much for taking us through that. Yet another earnings candidate for tomorrow's trading session is going to be Paytm. So here's what we can expect from the numbers now. For Q4, revenue is expected to come in at 2,174 crore rupees compared to 2,342 this time last year, which means on an annualized basis, there's a slip of 7.2% expected. And even on a sequential basis, a 24% drop in this metric is what is expected and what the street is largely penciling in for Paytm tomorrow. In terms of adjusted EBITDA, that's expected to drop by 70% on a year-on-year basis because it's expected to come at 70 crore rupees versus 234 crore rupees in Q4 of FY23. In terms of net profit, we're still expecting a net loss to come in this time around of 394 crores, and that's expected to widen from the loss that we did see this time last year at 168 crore rupees. So we'll just have to see what that net profit or net loss figure comes out to be at tomorrow. And in terms of loan disbursed, we're seeing a slight drop over there as well, and on the back of all the RBI restrictions that Paytm had been seeing, that's expected to come in at 4,865 crore rupees versus 12,550 crore rupees this time last year, which is a drop of more than 60% on a year-on-year basis. Now, Paytm has also announced that it will reduce its small ticket loan exposure. This is a recent announcement it had made, and this was due to cautious stance taken by regulators as well as their lending partners. So how is this going to impact Paytm this quarter? We expect revenues and EBITDA to decline. So that's one key metric we'll be watching out for. And also another factors to watch out for will be the impact of the PPBL loan, then revised growth outlook for lending, overall EBITDA impact, and the update on the online merchants that Paytm will be giving out hopefully tomorrow. So that's all the factors that we'll be watching out for when it comes to Paytm tomorrow.
Well, a lot of stocks to watch out for in tomorrow's trading session with their earnings. But for now, it's a wrap on this edition of Your Trade. Snehi and I will take your leave. Thank you so much for tuning in.